Good morning, traders and investors. My name is Roger Scott, and I'm the senior strategist for Wealth Press. Today is Friday. It's April 8th. It's about 7:44 in the morning. The market's not going to open up for another hour and 45 minutes or so. I'm here to give you guys an early start and to show you that the NASDAQ and the Dow and the S&P are up pretty good this morning, which is kind of interesting how choppy this week was and the fact that we're right at the 200-day moving average. So right now is a very, very important price levels for the stock market. I mean, look at this. The bonds have started moving sideways. RSI is at below 30, or no, excuse me, not at below 30, right at 30.47 or right around that level, which means the bond market, and as you can see here, it's been showing us signs of oversold pressure. This is very important because it appears to be pricing in all the nasty Fed moves intend to make throughout this year, including raising rates by a half a basis point, including a quarter, the war. This is very meaningful because if the bond market can contain choppiness and remain choppy or maybe even revert back, which I think they will back into its base, I would love to see them trade higher so I could sell them, but we'll see if that happens. The bottom line is, I think the bonds are overdone. And if that's the case, if bonds are going to go higher, that means the long rate is going to go lower. And if the long rate is going to go lower, that's going to relieve some pressure on the stock market. And I think the timing for that is perfect, especially in light of the fact that we are smack right in the middle of the 50-day moving, the 200-day moving average, as you will see right now. Look at that. Let me move this a little closer here, right there. We're kind of in that area. And if we can break above that area, and I hope we can, there's a good chance we can break above the 462.39 or the 460, let's see here, let's just say 463 level. And if we can break through the 463 level, well, let's just say the night is still young for us to make new highs. But I'm very encouraged by where we're at right now. And if you look at the Dow Jones, it's struggling. It's a little bit below, but as you can see here, I mean, in light of what we're seeing right now, it still hasn't broken the resistance, the support level. The fact that the bond market is starting to get more choppier than down is a very positive sign, and I'm hoping that it's going to regain some composure and rally over the next few days. Now, we had Fed data yesterday. We had jobless claims yesterday, and just so you could see here, the number was really solid. It was like 100 and something thousand. Yeah, here it is, 166,000. The consensus was 202,000. So unemployment rates are really good. People are working right now. I mean, look at this, 166,000. The average, the 4-week moving average, 170,000 now. So the number is very, very positive. So that's not going to roil this market. Now let's take a look at global economy. Then I want to show you some price levels to pay attention to. And then I want to show off 5 trades that we closed this week with a profit in all the various services, including microburst, sniper, precision profits, overdrive profits, and sniper again. We'll go over those in a minute, but I want to go through the global markets with you. The Fed has signaled that it's prepared to keep raising rates and reducing its stockpile of bonds and mortgage-backed securities in order to rein in the highest inflation in 40 years. Traders are now pricing in nearly 80% probability that the Fed will raise its key overnight rate by half a percentage point at its next meeting in May, and that's double the usual amount. That's something the Fed hasn't done since 2000. But again, look at the long bond. The long bond has been sideways. It hasn't really been moving that much. I mean, this is a little breakdown, but again, since March of 14, we've been moving sideways. So that's very, 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 that's a good indication. Businesses have been raising prices on everything from food to clothing, and that has put pressure on consumers. And some companies have been unable to offset the impact from inflation, even with the rate hikes. Wall Street is concerned that consumers eventually pulling back on spending at higher prices where it becomes too difficult to digest. Price increases were responsible for a rise in consumer spending in March. Otherwise, the results revealed a pullback. And next week on Tuesday, we have CPI, the Consumer Price Index. That's going to be very instrumental in telling us the level of inflation and where we're at right now. A rapid increase in interest rates could also affect corporate earnings growth, and that's where we're going to be up against in the next week or so. Investors received encouraging update on the job market Thursday. The U.S. Labor Department reported fewer Americans applied for unemployment. That's the report that I showed you right here. Now, looking at 1 month levels, consumer discretionary, folks, on a 5-day basis, consumer discretionary is lower, and we've got healthcare, consumer staples, and utilities rising. But again, you've got to pay attention to consumer discretionary, because if we can go above, let me just show you that magic level. My computer's stuck or something, I don't know. Now, we backed off pretty good, but if we can break above this level right here, the 191 level, 190, 191, we backed away, we hit it and backed away, we're going to be good to go. And the odds are we're going to be testing old highs or making new highs, one or the other. But this level is very, very important. The next level is 192, then 211, and that's it. We're taking that sucker home. So on the major indices, on the QQQ, you want to pay attention right now. Everything is dependent on the 200-day moving average. That is at 360. Let's just say 370. On the SPY, the next level is 462. And on the Dow, and keep in mind, the SPY is already above the 200-day line. And on the Dow, that level is 354. Let's just say 354. If we can make it above those levels, or if today we can hit the 200-day line, that would be very, very instrumental in giving us a bullish sentiment. Now, if you look at volatility, and let me just change this to an area chart, you could see we're not really doing all that bad. We're still going down, or kind of hovering around here. Volatility is not responding to the war right now, and that's very, very bullish for the market, because it looks like it's assimilating the war into its price. Similarly to what I'm seeing in the bond market, I'm seeing choppiness, and the stock market's trying to rally from these levels. So things are not nearly as bad as Wall Street experts out there are making you guys believe. And remember, April statistically is the third best month for stocks. Now, we took some juicy profits this week. Let me show you some of them. This is the wrong ticker symbol. Here's the right ticker symbol. Sprouts Farmers Market. We got out of this sucker. Let's see. We were in this trade for 15 days. We got in on 23rd of last month, right here, held it, and got out right here, right there on that bar. And it looks like it's even higher right now. So if you held, you probably would have done better than 19%. We held it for 15 days. Another trade we got out of was CME. We were in this trade for 5 days. We got into this on 4-1. That's right here, 4-1. Rode it for a few days down and got out right here. It was a perfect swing trade. We held that trade for 5 days, including weekends. Then we got the Moss trade. The Moss trade, we got into it on the 5th, right here, and got out of it right there. Moss did us a solid, and it's still going higher. Made over 20% on that one. Held it for 4 days. Then we took a trade on CSX. It's been a busy week, folks. Then we took a trade on CSX. Where did we get out on this one? 4-1 we got into it. Let's see, 4-1. And we already got out of this trade at 19% profit right here. The calls were just undervalued. We got out of it right here on the 5th, the next day, right there when it went higher. So we got in right here, and we got out right here, and then it went down. So we were in this trade literally over weekend. It was just a weekend trade, or just a few days trade. But actually, excuse me, we got into it right here. That's what I'm saying. We got into it right here at the end of the day, and we got out of it right there. So we literally held this trade for a few days. Got in right here, got out right here over the weekend. Nice, juicy 20.45% gain. And last but not least, Pepsi Cola. We got into this trade. We had it for 28 days. And we got into Coca-Cola on, let's see here, 3.8 right here. Look at that, near the lows. And we got out of this trade on 4.5, which is right here, right here. And we got out at about 20% profit, held it for about 28 days. But boy, oh boy, SFM, CME, MOS, CSX, PEP. 5 winners this week in various programs, including 2 for Sniper, PEP, and CME. All right, folks, if you got in on some of these trades, send me an email. I want to know if I'm helping you out. support@marketgeeks.com. And before I let you go, folks, it's hard enough to trade stocks without having to worry about all the noise and volatility in the markets right now. I realize that, which is why I want to give you all the tools that you need to be a highly successful trader as markets rotate out of growth stocks potentially. And that's why I went live this week to go over one of my favorite rotational strategies. Also giving away my #1 sector play for the next 6 months. Click the link below, watch the replay, and find out which sector is on my radar right now. You don't want to miss out. I'll talk to you guys later. Have a great, great day. Send me some love letters, support@marketgeeks.com. And if you were in one of these 5 winners this week, let me know. How else would I know if I'm helping you? Support@marketgeeks.com. Bye, guys. Have a great, great weekend.